In just 6 weeks, South Korea's stock market lost more value than it lost during the entire year-long crash of 2008. This is the story of how a record rally turned into one of the fastest stock market collapses in modern history. It started with a boom. Fueled by excitement over artificial intelligence and memory chips, Korea's KOSPI index surged as much as 116%, hitting an all-time high of 9,385 points on June 19, 2026. For a moment, South Korea became the sixth largest stock market on Earth, powered almost entirely by two companies, Samsung Electronics and SK Hynix. But the rally wasn't just enthusiasm. It was leverage. Assets in leveraged exchange-traded funds ballooned from under $10 billion at the start of the year to more than $50 billion by June. Outstanding margin debt hit a record 29.2 trillion won, about $19.7 billion. Leverage is simple math. It multiplies your gains when prices rise, and it multiplies your losses just as fast when they fall. On July 28, 2026, news broke that China had begun mass-producing its own deep ultraviolet chip-making tools. A direct challenge to the technology edge Samsung and SK Hynix had built their dominance on. The KOSPI fell 10.8% that single day, closing at 6,023, its worst level since April. Trading was halted repeatedly just to slow the fall. Samsung dropped 13.4%. SK Hynix dropped nearly 15%, and its US-listed shares fell below their own IPO price. As prices fell, the same leverage that powered the climb now forced traders to sell. Margin calls triggered more selling, and more selling triggered more margin calls. The next day, South Korea's president publicly named Samsung and SK Hynix leveraged funds directly, demanding regulators act. The finance ministry held an emergency meeting and pledged new limits on retail access to leveraged ETFs, funds whose combined assets had already collapsed by nearly 70% from their June peak. By July 30th, the KOSPI had closed at 5,593, down about 40% from its June 19th high in roughly 6 weeks. The lesson isn't really about Korea or chips or any single stock. It's that leverage doesn't just ride a rally. It's the same force that turns a correction into a collapse. This is a snapshot of events as of July 30th, 2026, not a prediction. Simplified for clarity. Educational content only, not individualized financial advice.